Hey everyone, welcome back to the channel. Today, we're diving into how Trump's first 100 days in office are going to shape your investments. Buckle up because this is going to be a wild ride. First up, defense spending. Trump's commitment to military buildup is great news for defense contractors like Lockheed Martin, Northrop Grumman, and Raytheon Technologies. These companies are poised to see major gains as defense budgets expand. Next, energy deregulation. With reduced regulations in oil and gas, giants like ExxonMobil and Chevron are in a prime position for growth. While renewables face some uncertainty, innovative clean energy companies could still find opportunities. Now, let's talk tax cuts. Extending corporate tax cuts means higher margins and increased investments for tech giants like Apple and Microsoft, as well as banks like JP Chase and Bank of America. If you're invested in these sectors, you might be in for a treat. On to trade tariffs. Import tariffs could encourage onshoring, benefiting industrial stocks like Caterpillar and Deere and Company. But beware of potential price hikes and strained trade relations. Infrastructure spending is next on the list. Plans to rebuild America's infrastructure could boost demand for companies like Vulcan Materials and United Rentals. This sector is definitely worth keeping an eye on. Finally, financial deregulation. Easing bank regulations could spark growth for investment banks like Goldman Sachs and fintech companies like PayPal. These moves might just make the financial sector the place to be. So, there you have it. Trump's first 100 days are packed with policies that could have a huge impact on your investments. Keep these sectors on your radar, and you could be well positioned to capitalize on the changes. Don't forget to like, comment, and subscribe for more updates. Thanks for watching, and see you next time.